You all must have heard that do this investment, do that investment so that you can save the tax. In this video, we are going to see what are these investments. There are various sections of Income Tax Act under which you get these deductions. The first is the very famous and the biggest one, Section 80C. If you are doing certain kind of investments like equity linked saving schemes mutual fund, that is ELSS, provident funds, national saving schemes, NPS, or paying a premium for your life insurance, then it comes under Section 80C. If you have a home loan, then the repayment of the principal component of the loan is also deductible, even though there are so many options available for you. The maximum limit of deduction under Section 80C is only 1.5 lakh per year. This is related to your health, so listen carefully. In case if people for whom you are paying health insurance are above the age of 60, then the limit is rupees 50,000 instead of rupees 25,000. Apart from this, if you are spending any money on preventive health checkups, then the expenses for the same are also deductible up to rupees 5,000. But this is within the limit of rupees 25,000 or 50,000 as the case may be. The next one is a smaller one but very useful every time. All the money you get, you most likely put it in a saving account until it is spent or invested somewhere. This saving account provides the interest on your money. This interest amount is taxable. But at the same time, interest on savings accounts up to rupees 10,000 per year is tax deductible under Section 80TTA. Many students take a loan for their higher education. The interest paid on this loan is also tax deductible under Section 80E. This deduction is available from the year you start paying interest till 8 years or until the year you are paying interest, whichever is earlier. There is no limit on the maximum amount of deduction available under this section. If you are salaried, then chances are that your salary will have a house rent allowance component. Sometimes it may not be there, or if you are not a salaried person, then still your house rent is deductible under Section 80GG. The deduction is available up to the least amount of 3 numbers calculated that are available on your screen. Many times we donate some part of our earnings as donations to NGOs or charitable trusts that are doing social work for needy people in society. These deductions are deductible up to 50% of the amount that you have donated. In certain cases, this is available up to 100% of the donation amount as well. But if you want to get this benefit, then the organization to whom you are donating money should be registered with the income tax department as well. So check that out before giving donations. Now the next section might be quite surprising for you. If you make any donation to a registered political party, then such donations are 100% tax deductible under Section 80GGC. Interesting, isn't it? Guess why it is 100% tax deductible? There are some more sections under Chapter 6 where you can get deductions if you do the related expenditures. Now let's understand about income tax returns and then we will conclude this video. Every year, you have to fill out a form in which you have to give all the details of income you have earned, sources of your income, expenses you have made, tax deductible investments, and many more things. In this form, you have to calculate the tax you are supposed to pay. Check if you have already paid the tax in advance, or is there any tax deducted by people who have paid you, and reconcile that with your tax liability. If there is any excess tax paid by you, then you can claim a refund of the excess tax paid. And if there is a more tax liability, then you have to pay tax and submit the return. Our financial year ends on 31st March. After 31st March, you can file the tax return for the year ended on the 31st March. The year for which you are doing tax filing is called the previous year. And the year in which you are filing a tax return is called the assessment year. For example, if you are filing the income tax return for the financial year ending on 31st March 2023, then the previous year will be 2022-2023 and your assessment year will be 2023-2024. If you are an individual to whom audit is not applicable, Then the last date to file your income tax return is 31st July for the year ended on the 31st March. After that also you can file the return with a penalty up to 31st December. But after 31st December you can't file the ITR. The amount of penalty for late filing depends on your income. There are various types of income tax return or ITRs called ITR 1, ITR 2, ITR 3 and so forth. You have to select this form based on the types of income sources you have. For example, ITR 1 can be filled if you have only salaried income, income from one house property and interest income. ITR 2 is to be filed if you have salaried income, income from multiple house properties, interest income or capital gain. You can see the details of other forms on the screen. Do you know that you can file your income tax return on your own? You might not need a professional person to file it for you. But if you are filing it on your own, then make sure you are well aware of this very complicated income tax act. Or it's always better to hire a professional to avoid non-compliance. Being a CA, I am very interested in telling you more details about income tax. I can take multiple courses on income tax itself to save maximum tax for you. But as we have a time limitation, I will stop here. Hope you at least got to know basic details about taxation. Thank you.